Hello there, I'm Ameera David. This is Boom Bust, and these are the stories we are tracking for you today. China's central bank has cut the guiding rate for the national currency yet again. I'll have the details on how it's affecting markets around the world straight ahead. Then Marin Katusa is on the show. In July, both Brent crude oil and WTI re-entered bear markets. So what gives? OPEC production, China? We'll dig into the why behind the oil drop. And in today's big deal, Ed Harrison will join me from San Francisco to talk about Bitcoin as he gears up to attend Coin Congress 2015. We've got that and so much more lined up for you on today's show. Don't go anywhere. Boom Bust starts right now. Well, we're on to day two with China cutting the guiding rate for national currency. The Chinese central bank lowered the daily fixed rate against the U.S. dollar by 1.6% to 6.3306 on Wednesday morning. That marks the biggest two-day lowering of its rate against the dollar in more than 2 decades. Keep in mind, on Tuesday, the People's Bank of China devalued the yuan by almost 2%, sparking concerns that China is starting a campaign to weaken its currency in the face of faltering economic growth and perhaps begin a new phase in the currency wars. The Chinese government says this move was simply meant to make the Chinese exchange rate more market-oriented. And on Wednesday, the central bank issued a statement dismissing concerns that China would continue depreciating the currency in the future. Now, the statement reads, in view of both domestic and international economic conditions currently, there is no basis for persistent depreciation of the renminbi. Recently, major economic indicators stabilized and showed good signs, which provides a favorable macroeconomic environment. Regardless of the intention here, the markets are reacting to the news. U.S. stocks tumbled for a second straight day. On Wednesday, the Dow Jones Industrial Average fell almost 200 points, or about 1.1% at the open. And global stocks also took a tumble. Japan's Nikkei index lost 1.6%, while Hong Kong's Seng index dropped 2.4%. And Europe's shares also took a dip. Germany's DAX index plunged 2.4%, while Britain's FTSE 100 was down 1.4%. As for currencies, the hardest impact was seen in Asia, with the Singapore dollar falling to a 5-year low. The Indonesian rupiah and Malaysian ringgit also fell to lows not seen since the Asian financial crisis in 1998. To talk about oil, Marin Katusa is back on the show. Marin is the chairman of Katusa Research and the author of The Colder War: How the Global Energy Trade Slipped from America's Grasp. This past July, Brent crude and WTI both re-entered bear markets, yet it was just a year ago that they were trading at more than $100 a barrel. So I first asked Marin if he thinks we could have seen this coming, and here's what he had to say.
Well, I published a year ago that we were going to enter this deflationary period, as I said for last year on your show. I also think that, we haven't seen the bottom. For the North American markets, let's focus on the WTI price of oil. We're on the edge of the shoulder season. You've got another 3 weeks max of driving. Therefore, the refineries are going to cut back on the amount of crude oil they're going to process. So I expect lower oil prices for WTI entering October, November of this year.
Well, one of the things people say you can pin this on is OPEC producing countries which are keeping their production numbers up in an effort, of course, to drive out competitors. In fact, in June, Saudi Arabia reported its highest level of crude oil output on record. What do you think about the strategy now in place? What I think they put it in place in November of last year. Would you say it's working?
Well, it is working, but it's not just Saudi Arabia. You look at Russia, they're reaching all-time highs. China, someone no one even talks about, is reaching all-time highs in oil production. The Americans, you look at what they're doing, reaching high in production. Also, Canada's at high production. Now, there's other countries like Venezuela, Mexico that are going the other way, but it's not just Saudi Arabia. We've talked last time on your show about Iran. You're going to see more production hit the international markets from Iran. So, Saudi Arabia was the catalyst to all of this. So you've got production increasing, but the demand for the production is not increasing at the same rate as the supply is increasing. Right. So, you're having a flux here, so the Brent oil is going to also have some tough times ahead here over the next 6 months. That's
a really good point, that it's not only Saudi Arabia here. I do want to ask you, though, about that particular strategy in the sense that it's trying to drive out U.S. shale producers. How is that strategy working as it relates to that specific goal? I mean, how do you think they're adapting? What are they doing, if anything, to remain afloat here?
Well, like in any sector, innovation through necessity. So there's going to be a lot of guys that are completely maxed out on their lines of credit. They're done. There's going to be a big implosion of debt. But as we talked about 6 months ago on your show, it's all about how that debt's rolled over. And when those hedges, you see what's been saving the North American markets are the companies hedge always a year in advance. So this year, this November, we start unwinding the hedges of $90, $80 oil. And what are the new hedges at? You have the forward curve, I think, just under 60 today. So, yes, the Permian Basin, the Bakken, the Eagle Ford, they've really decreased their costs. So you've seen about a 20 to 25% drop in cost of production in the last 24 months. But is it at the point where the whole sector is going to survive? No, definitely. So you're going to see a lot of companies go to heaven or hell, depending which side of the trade you're on. But it's definitely been because of the pressure that Saudi Arabia instigated with this strategy.
Right. Well, that being said, I have seen other reports that suggest, U.S. shale producers are still receiving funding, still have some, oil hedges in place, and are trying the best they can and are doing a fair job trying to ride this out. So, I mean, what do you think about that? I mean, how long could that really go on?
Well, I think you're going to see the companies like EOG and some of the smart guys, they're innovating, they're going to get their costs. And more importantly, what people have to understand, there's thousands and thousands and thousands of wells in the U.S. and in Canada that have been drilled, that have been fracked, and they just haven't been completed and tied in yet. So within 48 hours, let's just say something happens and the price of oil jumps $5, $10. There's so much supply that can come online. And also new techniques like fracking, fracked wells, so we call it refracking. So there's all these new technologies coming in. The drilling times have decreased by half in the last few years. So all these things are decreasing the cost of production. And I think you're going to see the cost is going to go lower. Therefore, companies will be able to survive longer. So will we see, I'll make a bold prediction, will we see oil under $40 in the next 12 months? I believe we will.
Wow. Well, I'll get to that in a little bit. And, taking a look at Saudi Arabia, a lot of analysts say that Saudi Arabia, as you mentioned, the instigator of all of this, could actually hurt itself in the process of doing this. The country is facing huge budget deficits this year due to low oil prices. The deficit for 2015 is expected to be 20% of its GDP. Now, I know we're talking about an extremely wealthy country here, but do you think their plan could backfire at all?
Definitely. I think all plans can backfire. And the question will be that I believe that Saudi Arabia underestimated was the innovation in the sector. And I think they thought a lot more companies would be struggling much more. And also, I don't think Saudi Arabia saw the Americans backing Iran the way they did for the deal with Iran. So I think they got caught off guard on two aspects: the improvement in technology to lower costs, and that the Americans actually did a 180 and now are supporting the Iranians. I think Saudi Arabia is sitting there now realizing that maybe they have to work closer together with Russia and China and the emerging markets. So I think there might be a new alliance forming because of all this and the evolution of the alliances and how things are changing.
Now, Marin, you already talked about the fact that it's not just Saudi Arabia here that's overproducing, that it's more expansive than that. How many other countries are overproducing or ramping up production? I heard you mentioned Russia. What about Venezuela? What about Iraq? What do you think about their output?
So Iraq's in a different situation because of the political situation, but you look at Iran, they're now positioning to increase production of oil, plus they have a large above ground storage that they need to sell into the international market. And look, China came out last week and said, hey, we're willing to trade oil in non-US dollars. So there's things changing there. You look at the Permian Basin, the Eagle Ford, the Bakken, it's been holding very strong. Canada, you look at places, the Permian of the North in certain areas, and the Montney, they're doing quite well. So I think a lot of people have been surprised how well the production has been staying, especially in non-US dollar areas. So yes, the price of oil has dropped significantly in Russia, but so has the ruble, therefore their costs have dropped accordingly, and they keep pumping out the oil. So I don't see major cutoffs now. The reason why Mexico's dropped their production has nothing to do with this recent time. It's actually been many years in building. They haven't been investing in the infrastructure to revitalize their fields. Venezuela, the same situation. But Mexico and Venezuela aren't the key players right now in the oil. It's Russia, the U.S., and Saudi Arabia. Those are the three countries to watch when it comes to serious production. Okay.
And of course, you mentioned China. That's the other factor at play here. This is the world's top energy consumer. Demand sinking over there. How much do you think the problem that we're seeing right now can be attributed to the Chinese slowdown?
I think quite a bit. Everyone's talking about, is the super cycle done? I don't know, but the reality is it's happened to the American economy when they were growing. Everyone has blips and pullbacks, but the reality is this: half of the coal that's consumed in the world is in China, half of the iron ore, half of the copper. You look at the growth in the uranium sector, people are focusing on China.
All right, time now for a quick break. Stick around, because when we return, we're talking gold. Despite the other commodities trending down, gold is ticking back up, and we've got the details for you. Then in today's big deal, Ed Harrison joins me from San Francisco to talk about Bitcoin as he gears up to attend Coin Congress 2015. Should we be bullish on the cryptocurrency? He'll tell us coming right up. Stay with us. And as we go to break, here are the closing numbers at the bell.
Do we speak your language? Want news, programs and documentaries in Arabic? It's all here on RT. Reporting from the world's hotspots, VIP interviews, intriguing stories. Are you here? Then try RT Arabic. To find out more, visit arabic.rt.com.
Crosstalk rules in effect. That means you can jump in anytime you want.
In this episode, we're going to talk about the problem with money. Many, for example, now agree that having bankers print over 90% of money by issuing loans is a problem. They also see that the euro currency is a problem for nations like Greece. We're going to talk about all of this.
Welcome back to the show. In the past 7 weeks, wildfires in California have burned over 250 square miles of land. The fires have required around-the-clock attention from tens of thousands of firefighters. But you'd be surprised to know that not all of them are coming from the local fire department. Boombus' Bianca Fascini has more on that.
It's taken about 2,000 firefighters to contain the bully fire that blazed over Shasta County in California during the past 2 weeks. A majority of those firefighters are trained professionals who make a reasonable living off of providing fire safety. But almost half of them are not professionals. They're prison inmates, and they make $2 an hour at most. This is part of a program run by California's Department of Corrections and Rehabilitation and CAL FIRE. There are more than 4,000 inmate firefighters in the state, and their cheap labor saves California more than $100 million a year. And it's not just the government making a profit off of the prison laborers. Private companies, like Whole Foods, are also taking part. Colorado's Department of Corrections has created several contracts with private businesses, including Quixotic Farming, which produces tilapia. They pay the prison 85 cents a pound for the fish, which is raised by the inmates, and then it's sold at Whole Foods in New York for $11.99 a pound. The concept of prison labor has always been controversial. Some claim it helps build career skills for inmates, some of which have never had a traditional 9-to-5 job. But it's hard to believe the government and businesses are interested in providing rehabilitation services or decreasing retention. By offering $1 wages, it allows them to unfairly compete with companies that do provide minimum wage, which can obviously affect the greater economy. Not to mention, inmates have almost no means to do anything about it.
Bianca, this story is just absolutely fascinating to me. We were talking about this earlier, and I can't get over the fact that inmates actually do this kind of work. I know that they do various things, but this I was not expecting. How much money do these inmates make for companies?
So nationally, the estimate is around $2 billion.
Okay.
These tens of thousands of inmates are making $2 billion for all of these companies. But now that there are these smaller boutique companies that sell at Whole Foods and maybe Bloomingdale or something are now trying to attract prison laborers, that number could expand greatly. And, there's not really any sort of limitations on this. They're all paid $1, even if the things that they're selling are going for $20 in the store. So,
again, truly an incredible story. Thank you so much for bringing it to us today, Bianca Fascini. Well, China's currency devaluation looks to be gold's gain, as the yuan devaluation triggered fears of a currency war and battered commodities like crude and copper. Gold was quietly trading upwards. Joining us now live from New York with all the details is Boombus market correspondent Erin Aid. Hi, Erin. We know Asian currencies and commodity prices have taken a beating this week. That's no surprise, but gold does seem to be doing pretty well now. Tell us about that. What's going on here?
Yeah, Ameera, like you mentioned, dollar and global equities, they slid over these concerns about China's devaluation of its currency. However, all the while, gold, that rose for a 5th straight session. That was on Wednesday, and it's going to be 6 after market closes today. So it hit a fresh high. It was 3-week high. Big news. And earlier in the day on Wednesday, the People's Bank of China set the yuan's midpoint reference rate weaker than Tuesday's surprise 2% devaluation. Now, this move, it sparked fears of a currency war and hit global equities, which prompted some investors to seek safer assets, or at least ones that they perceive to be much safer, and gold is one that a lot of people do. Now, as a result of this, the metal has now recovered more than 3% from a 5.5-year low of $1,077, which happened in late July. Now, immediately after Tuesday's devaluation, all this worry that a lower yuan would reduce buying in China, which is one of the largest consumers of gold, that initially drove the price of gold below $1,100. Yes, $1,100 a troy ounce. However, it has since recovered. Gold for December delivery, which is the most actively traded contract, that was recently up 1.5% to $1,123 a troy ounce on the COMEX division of the New York Mercantile Exchange. And that's the highest level it's seen since July 20th. And we all know that gold's value, it goes up in times of uncertainty or political strife. And as investors believe that it will actually hold its value better than other assets, and it tends to do that. And it's clear that the market has certainly said it thinks that this is one of those times.
Indeed. The question is, it does seem like good news for gold investors, but Is this uptick in gold sustainable?
Yeah, it is a valid question, Ameera. And if you lower the yuan, and if the lower yuan's, it sparks this kind of currency war, then gold, it could sustain its upward movement for quite some time. You know, in China, the rising price of gold, it could encourage gold investors, but at the same time, it could discourage jewelry buyers. Now, as the price of gold, it rose to its all-time high of $1,902 an ounce. I have a lot of gold prices I'm going to quote for you here. That was on September 11th in 2001. You know, many Chinese consumers, they hoarded gold during that time. However, since then, the price of gold, it's fallen as China's economy has slowed down, and signs of a U.S. recovery have prompted investment in equities. Also, you know, the prospect of a Fed interest rate hike here in the U.S. in September, that could present a long-term cloud over gold as a whole, and that's because an interest rate hike, that would boost the value of the dollar, which tends to trade in the opposite direction of gold. And lower U.S. rates for longer are good for gold, as gold pays its holders nothing, and it also struggles to compete with yield-bearing investments when borrowing costs rise. Obviously, bonds, that's their yield-bearing investments. Now, you know, analysts, they also pointed out that the demand for gold in China and India, it tends to peak towards the end of the year, which could also provide a lift for gold. So I'm giving you these back and forth of why it could go up, it could go down. But the fact of the matter is, it'll be really interesting to see if this uptick in gold prices is sustainable over the long term. We'll certainly be keeping an eye on that.
Right. It's kind of one of those we'll have to wait and see situations. But going beyond China, you talked a lot about China and the factor there. Is there anything else you're seeing that's contributing to gold's rise?
Yeah, you know, Ameera, some analysts, they believe that some of the upward movement has been prompted by short covering. After the yuan's devaluation Tuesday, gold, that fell nearly 1% from its opening price to a low of $1,094 an ounce. However, later it settled on $1,108 an ounce. So there hasn't been a lot of fresh buying. It's more short covering, a short covering rally, I guess is the best way to put it. But, you know, bottom line, China's devaluation of the yuan and growing fears of this currency crisis, they're really what's driving gold's rally right now. Nothing else. It wasn't a good reason for gold to go this high other than the devaluation. So right now, I'm going to peg that as the culprit of this. But again, we're going to have to wait and see if this rise is sustainable over the long term.
All right, got you. So China, the major player here. They're driving it up and they're driving it down. So we'll have to keep an eye on China. Erin, thanks as always for that great reporting out of New York. Time now for a very special big deal with Ed Harrison. We've got Ed all the way out in San Francisco attending his very first Bitcoin conference. It's called Coin Congress, and it's bringing together leaders to talk about innovation in the industry. So Ed, let's start right there. You know, we used to talk a lot about Bitcoin on boom bust, but since the boom has gone to bust, we don't discuss it as much. What's going on in the world of Bitcoin these days as you see it?
Consolidation, I think, is the big word. That's the answer to your question. You know, there's increasing competition and cost pressures for the companies that are in the space. And as a result of that, we've seen companies get together. You know, the weaker hands have folded. And as a result, I think that the big move within Bitcoin, the industry, is consolidation.
Indeed. I think we've seen a lot of consolidation and a lot of new startups at the same token within the space. What about the financial backing for Bitcoin? Has that tumbled with the price?
Yeah, so, you know, the price, it was over 1,000 per Bitcoin at one point. We're in the 200s now. I would say that the answer is no, it hasn't tumbled with the price. VC investment in Q2, the average size of deal size is comparable to what we saw in Q1. Q2 is the last quarter from April to June. You know, as well, we've got notable financial institutions. We have the exchange, the NASDAQ exchange, which has actually been trialing Bitcoin technology. There's also many banks that are using blockchain technology, which I think is the interesting thing. It's not just Bitcoin as the investment or as the currency, but blockchain technology. We see people using that. And I think the real problem is merchant adoption. It's lagged because there's not a compelling reason for consumers in developed markets to use Bitcoin. That's the real problem. And I think that the value proposition for mainstream consumers just really isn't there. But nonetheless, we've had the first positive quarter in this past quarter, Q2 2015, since a year ago, Q2 2014. That means that we've had a price drop every single quarter since the second quarter of 2014. And for the first quarter since that time, this last quarter, we've actually seen prices for Bitcoins go up.
Right. So perhaps the future is looking a little bit brighter. Well, Aaron talked about gold as a safe haven asset in China, given the turmoil there. Now, if adoption in advanced economies has lagged due to the poor value proposition, what about less developed countries then?
Yeah, well, alternative currencies, they act as a hedge against problems in banking systems and uncertainty around national currencies. So you look at the turmoil in China last month with regard to the stock market. That was a perfect catalyst for the use of Bitcoin. I think that catalyst has continued. You heard Aaron talking about gold. Bitcoin is another place that people can get into. And I've heard stories of, Greece in particular. You're talking Argentina, Venezuela. Those are countries that you're going to see more adoption because it acts as a hedge against a banking system collapse, like we saw in Greece and also in China against uncertainty. So if you think of gold catching a bid, I think that we are also seeing Bitcoin catch a bid within China as well.
All right. Well, I do want to address the risks because as far as I understand, Bitcoin does tend to attract a lot of underground activity, if you will. What's going on in that space?
Well, yeah, in terms of the risks, we had the Ross Ulbricht thing that where, he had the Silk Road, which was a haven for illegal activity, et cetera. Just yesterday, or actually I think it was just yesterday, the New York Times had a piece about an individual who was in Florida, a guy by the name of Anthony Mergio, who was involved with the JP Morgan Chase hacking. He was arrested and he is now being charged with some sort of money laundering scheme, money laundering for cash using Bitcoin. These are the kinds of things that mainstream consumers are hearing about Bitcoin. So it still has this tinge of sort of a fringe environment that it's used for illegality.
Right.
But I would say, me personally, I'm bullish on Bitcoin, the technology, and I think that it's not going to be just about these sort of, if you get away from Bitcoin as a currency, there are a lot of alternative uses that you can find for the currency in terms of payments and so forth.
All right, Ed, we've only got like 10 seconds left, but tell me why you're bullish on the cryptocurrency, because we've talked about this before. Why are you bullish on it still?
Well, yeah, when you looked at the NASDAQ using it, you look at these banks using it, they see that it's low cost and that it means that you have third parties, that you don't need a guy in the middle to make the transaction happen. It can happen without a third party. So it's a great thing.
All right, well, there's plenty more to come from you and from this Bitcoin conference tomorrow when it is in full swing. We'll have you covering Coin Congress. Thanks for all the reporting you did for us today, Ed. I appreciate it. We love hearing from you guys. Tweet at us at AaronAid, at EdwardNH, and at Bianca Pacini, and of course, at me, Ameera David. Remember, you can see all of the segments featured in today's show on YouTube, youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks for watching, and we will see you next time.